Good evening, everyone. Welcome. I'm very pleased to be moderating this very important panel and discussion about the Saudi banking sector. Arguably, the engine of the economy, serving both the mega projects as well as digital inclusion. I'm honored to be joined here by leaders from the sector, starting next to me with Mr. Mohammed, who is the CEO of STC Bank, pioneering digital bank in the kingdom. Mr. Abdulaziz AlOnaizan, CEO of Bank Albilad, Sharia compliant bank known for its strong retail foundation and agility in the face of quickly evolving regulation. Mr. Tony Cripps, CEO of Saudi Awwal Bank, or SAB, who is bringing international experience to the kingdom and helping SAB become a lead in project finance and ESG-led transformation in the kingdom. And last but not least, Mr. Szafir, the CEO of D360 Bank, a Sharia-compliant digital bank born in the kingdom. Welcome, everyone.
Thank you.
Thank you.
Thank you very much for joining. And we have a lot of topics to cover in a short time, so we will try to cover different aspects of the banking. Starting with Mr. Abdulaziz, you talk a lot about diversifying funding sources. And in your annual report, you specifically talk about how that's the only way to sustainable growth for the banking sector. Today, there's a widening gap in the kingdom between the loan demand growth and deposit growth. The mega projects, the Vision 2030, all the ambitions of the kingdom are driving that demand. What avenues are you tapping to address that challenge?
Well, first of all, thank you for having me here today, and I would like to thank the organizers as well for a successful FII 9. I think this is very well recognized now. There is no doubt that Vision 2030 and what comes out of it in terms of project finance, including the boom in the housing sector, requires funding from the banking sector. And as you know, there is a growth for the last few years, very heavy growth in the housing sector that led to the housing sector funding is representing almost 30% of the bank's balance sheets. And that would require banks to look for alternative venues for funding, be it enhancing the product offering, enhancing their customer experience to attract new customers. As you know, as part of Vision 2030, the saving we have to reach by 10% by 2030. So I think overall saving schemes to have more of stable deposit base in the banking sector. And in addition to that, of course, banks will have to look at the interbank market, where they can strengthen their FI relationships to access the repo market for short-term liquidity. I think that's one avenue as well. And we have seen also the activity in the capital market lately. The capital market issuance this year in Saudi alone is reached, by banks, reached about 70 billion riyals, which shows really we can close the gaps for the long-term financing, more stability, more capital for banks. So I think, there is definitely a continuous demand on the growth, but I think there are venues for funding these demands. Thank you.
Tony, from your perspective, you've been heard to say that the growth continues to be robust despite these challenges. So from your perspective, A, how are you addressing the liquidity challenge? And B, is the liquidity challenge coupled with asset quality challenges? Are you seeing distress? Are you concerned about any aspects?
Well, firstly, thanks for having me. So to answer the last question, no stress. It's fine. I sleep well at night. It's okay. Saudi is going through a normal process of deregulation, which I've seen. I started my career in the 80s. I saw it in Australia and then Singapore and Hong Kong and even in London. It's a natural path where you start with very fast growth and then you have to solve the capital markets issues around that. And the way in which you do that is being done currently in Saudi, but it's only just really started in the last 3 or 4 years. And we've seen Saudi banks tapping the international markets. That's normal. But what we're seeing on the ground is really interesting. The government's very aware that you need to establish a yield curve that's visible and liquid. So that's the starting point, which is happening under the Debt Management Office, and that's developing. And then after that happens, you can create different products. You can create a securitization industry, which is also happening under the housing SRC. They've already issued their first bonds. And then additionally, you've got a really interesting development that's happened in the US since the financial crisis, which is the development of private credit. So the size of the private credit market in the US now is massive. And it's one of the reasons why the banks in the US are liquid and the economy is strong and growing. So as those things develop in Saudi, we personally don't see an issue around the tightness of funding, because it will start to alleviate as those things develop. So the demand is, yes, everyone knows it's far in excess of bank capacity, but as those things come in and more foreign investment comes in and the Saudi market opens up, not just to institutional money, but also retail money from around the world, and that's already started as well. So we don't see it as a challenge.
So there are enough sources to address the growing demand.
Yeah.
Now, staying with the point on asset quality, the housing reforms, are they going to lead to cooling off? Are you pricing that in? Do you see any challenges in terms of the mortgage portfolios that you have with the recent reforms?
It's probably slowed down a little bit, just as people try and digest the changes, the freeze in rents, the land tax. But we still see a very strong pipeline in demand, and we still know that Riyadh's population is growing, and home ownership is also growing. I think the land tax issue will throw up opportunities as people who own land that's not being used for anything will want to put construction on it to minimise the tax impact. And that may create issues down the track if there's an overcapacity in a certain area, commercial buildings as an example. But the housing market itself, the retail mortgage market, is very strong, and it's very secure. The infrastructure is terrific, and we're very positive on it.
And we need the catalyst.
Yeah.
If I may add to this, just a point to Tony's point. I think one thing that is different here in Saudi Arabia is that for residential mortgages, it's mostly for first home owners.
Yes.
And that differentiates really the Saudi market from other markets. We've heard, for example, people talking about what happened in Florida, what subprime, or what happened in Dubai, and all of this. But Saudi market is different. First home owners, the loan to value has appreciated, so you have really deep loan to value. So I think the risk on residential mortgages is very limited, very contained.
You're starting at a very low risk to begin with.
Exactly.
Yeah. But another aspect of reform, and Tony referred to it, is the enabling mortgage-backed financing by SAMA. How are you seeing that change, Abdulaziz, the real estate financing market?
Well, I think, as we mentioned earlier, we have reached almost 700 billion riyals in home loans. And I think, establishing the SRC, that was one way out to offload some of these mortgages. I think the total underwriting is about 50 billion riyals, if I'm not mistaken. But there are further steps needed to further develop the capital market to enable, securitization with different asset classes, with different, I would say, segment for different segments in the markets, to attract retail investors, to attract pensioners, to create, a secondary market for these MPSs, to be able to really have a two-way market. Establishing the SRC by itself is one thing, but also developing the ecosystem around it and having risk actively traded in the secondary market and giving people easy access for investors to these residential mortgages, I think will help in really continuous growth of the mortgage-backed securities.
But you as banks also need to develop the internal capabilities and systems to do that.
That's right. But not just commercial banks. I think commercial banks, APs, and of course together with the regulators, whether it's CMA or SAMA.
And as we talk about all this growth, which is great from the point of view of the P&Ls of the banks, we're also looking at looming cuts in interest rates, today's included potentially, how
So are you expecting a cut today?
I'm not one to
I've
comment
already
on
said
cuts.
yes on live TV, so I hope it happens.
The last I read is there may be one, but not as big as Trump wants.
Okay.
So that, I leave it at that. But from your perspective, do you see contracting NIMs? How are you preparing for for potential rate cuts?
I think the interest rate cut will be definitely beneficial for corporates.
Yeah.
Because they will have access to credit, they will have improved in margins, so that will accelerate maybe the lending in the corporate side. For banks, it depends how banks are positioned for that. If they are proactively managing their interest rate risk, then I think this will be welcomed, because that will improve actually the NIMs.
Yeah.
And if they have extended duration, if they have active treasury, I have my treasury team here in front of me, and they're smiling, so hopefully they are well positioned for that.
Yes.
So I think banks will benefit if they are proactively managing this risk as part of their overall balance sheet management, as part of their overall interest rate management. But overall, I think it's going to be positive.
And Mohammed, for you, SMEs is a client, and this easing of prices, it presumably helps with expansion and is a positive for them. How do you rate this development?
First, I'm glad to be on the stage in such a great event. When it comes to the SMEs, I think the prices reduction definitely will end up by a positive story. We believe that there will be an energy injection into SMEs' growth plans. Banks will be the major catalyst that will enable such movement for SMEs. What is really important for the SMEs to realize the positive story is to convert that to a better innovation and a better movement into their business and growth plan. It's better employment rate. So the contribution for the prices reduction should end up by the best positive story ever. What we see today as a banks also, we are not looking at them as only a lender, let's say player. We're looking at them to be as a real strategic partner who will guide them into the right way forward to ensure the sustainability for these businesses. At the end, the banks should think in a very smart way to enable all the SMEs with the right products. We're not gonna offer, let's say, a one-size-fits-all product. We'd like to think about certain tailored products about, for example, supply chain financing, point-of-sale financing that will be linked to the SME performance and will allow the SMEs to move forward with a better lending and a better growth and a better sustainable system that will stay forever. I believe today also with the prices reduction that could happen, I'm talking about it from the ecosystem balance. We don't want one party to win the game alone. We want the whole ecosystem to win the game with a balanced formula that will allow banks to gain, SMEs to gain, and the whole ecosystem within the country to gain. So I believe from that angle, prices reduction maybe on the short term could hurt some parties, but definitely on the long term, it would give us a better sustainability for our ecosystem, better sustainability for our SMEs, and a better financial growth for our banks. We don't want to live in a market where the prices are beyond the capacity of the SMEs. We want a very fair environment that will allow all parties to gain. And I believe this is going to happen within Saudi Arabia, with the momentum happening today within the whole banking ecosystem. The growth and the momentum happening for the SME in Vision 2030 also will give them that edge. In total, I look at the story in a very positive way, and I believe there will be a big gain for all stakeholders.
And you talked about designing products specifically for SMEs, and it talks to agility. With that, maybe I move to USA and ask you about why a digital-only bank? What's the benefit? Traditional banks are making strong headways in the digital space. So tell us about your perspective about why a digital-only bank. What's the benefit?
That's a tricky question, I think. Definitely, traditional banks have done a great job, and I think apps are already good everywhere, right? So if you would ask a customer what's the difference, probably our customers would say the service, the ease of use, how simple it is to work. For example, if you want to transfer money to another country, to the UK or to India, from your app, 2 clicks, we will let you know how the money's out. 97% of the transactions will be there probably in 4 minutes. Your money's in the UK, we ping you. So very simple. But I think the massive difference and probably the secret sauce of digital banking in the world is just technology. And it's the fact that having no legacy, we can operate under an operating model that is really asset light and low cost. Asset light because we don't need to have a huge number of assets tied to activities that are not core for us. For example, just picture hundreds of branches with the big branches with the parking and the air conditioning and the main offices with the big building, the logo, and thousands of employees, or the server farms. Server farms actually on premise are big buildings with servers inside that every 3 years they're obsolete. So you need to throw everything away every 3 years. So all of that consumes. So when you price a product, you need to price that in, right? So eventually for customers, we said customers see great UX, ease of use, but also they see, which they love, lower fees. And I think the trick is that we can be profitable, make money. So DC60, we have every single product we have is profitable. By definition, we don't have like loss-making products because we have very low cost base. So we can be profitable. And what we do is that advantage, the cost advantage, we pass it on to the customer. That's the main difference. Now, as another enabler of the technology besides the low cost, when you are cloud-based and you can have a lot of information stored in the cloud, where you compute and you store apart, you can do real-time computing. So what we can do is, like we do now with a loan, without salary assignment, you apply with a loan, you get it done in probably 3-4 minutes, 5 minutes with everything, with the Sharia compliance process, with the promissory note, with the back with a commodity, all done. That's how hopefully we can team up and start bridging that gap of the penetration of personal lending in the kingdom, which is very important. As we said about the vision and SMEs, the same thing applies to retail, right? To bridge that gap by 2030 in terms of lending to individuals.
And you've done this, both traditional and digital, actually, globally, Europe, US. How do you see it different from what you see in terms of digital banking and the rise of digital banking in the kingdom, specifically?
I think the main difference with the kingdom, I think, and Abdulaziz, you talked about how mortgages are different here, and probably people understand how different.
I have difficulty hearing you, by the way. They hear you, I can't. Because of the noise around.
I can hear, I'll pass it on.
Because I'm shouting here. How the mortgages here are different. Mostly first-time mortgages and the loan to value is different. I think the kingdom actually is a bit of a unique, rare abyss in the world. And as foreigners, we always see that, right? So first, and everybody talks about that a lot, but the youth of the population, probably 70% below, 35 years old, and the growth rates. So for example, banking sector is growing double-digit every year, and the profits double-digit. So when you find a country that grows so much, is so young, usually it's an underdeveloped country where there are a lot of other risks. Well, this is a developed country with growth rates. This is a unique quadrant, right? We are there alone, as in the kingdom. And that has a lot of still runway because if you think about, for example, about 17% of Saudis have a credit card. The world is at 50, 80%. So we have probably a double-digit growth rate for 10 years more. So that's unique. When you combine that with the fact that the young people are educated and are crazy digital, this is a country where if you're kind of okay with a podcast, you're going to be top in the world. That's unique. And that's what happened when we gave them a digital platform, which is banking, digital bank. In 10 months, we already have 2 million customers at D360, which is amazing. It's amazing. So I think the main difference is that we are alone in a quadrant, but the secret sauce is not that. And that, as a foreigners, believe me, it's shocking. This country has a vision, and every citizen, you're mostly non-Saudis on this side at least, when you live in this country, even if you're not Saudi, you get a message every year when you're about to discuss your bonus with your managers. It's just the government sending you their KPIs, how they did the year with a roadmap, and how each minister is doing. So it's a country run with a relentless execution, with a vision. And I think nation building at that quality, you don't have in other places. So if you want to go digital on anything you do, this is, I think, a unique place, a unique opportunity, unique timing in the world.
Yeah, it's an incredible amount of transparency and inclusion for the whole economy, from citizens to banks to corporates.
Crazy. And then the underlying digital infrastructure of the kingdom, the way we can open accounts, how identity is managed. I mean, it's so well done, you wonder why all other countries are not copying it right away, right? It's a very unique environment.
Tony, you've also talked about symbiotic relationships between digital and traditional banks. Can you elaborate on that?
Yeah, so when I started in technology in the late 90s, the question was in banking, will the internet catch on? Does anyone think? And I went, yeah, I think it probably will. So I ended up as head of technology. And back then, what we saw was digital challenges in certain areas in the banking industry. One of them was FX. And so these FX platforms were popping up everywhere, and banks were saying, well, what do we do? And the answer was collaborate with these platforms. And ultimately what happened was we helped them be lower cost than they would have been otherwise, because we provided the back-end clearing and the back-end price discovery. What they captured was a client base that we quite possibly weren't even going after. So it was a win-win. It was, as you said, symbiotic. So I think it's the same thing today, and we've spoken about it. There's a complexity in traditional banking that you need, which digital banks want to avoid. And back-end services like that can help. Product support can help. If they didn't want to do a credit card and we gave them our Saab credit card and the DBS brand was on it, well, fine. So I think it creates partnership opportunities as opposed to threats.
And staying with the partnerships, taking it beyond just banks, you've talked about partnerships between fintechs and other technology providers. What kind of partnerships do you envisage there?
So I think the world is exactly, we talked with Tony, there's first the growth of the market opportunity is such with SMEs, corporates, and that you will see probably the next 5 years, all of us, signing partnerships, doing things together. In the past, you would said that's not happening. In the case of digital banks, because we have the infrastructure in the cloud and we can publish our APIs, what we're doing at DC60 is trying to be the bank of the fintech world, right? So the vision calls for, I think, like 500 fintechs up and running by 2030. We are nearly there. I think like 300 already. It's going super fast. So fintechs need access to the banking ecosystem, everything you name it, from the ACH to issuing cards, etc. For us, that's very straightforward. So we are working today with about 7 or 8 companies already being their bank, banking as a service. So I think in the future, to Tony's words, I mean, the fintechs, digital banks, and traditional banks, there will be an ecosystem, and we will all be much more interconnected, absolutely.
If I may add to this just one point, I think the partnerships is very important, but without the regulatory landscape that will facilitate these partnerships through open banking, through banking as a service, and all of this, wouldn't be possible. We have in Saudi Arabia today, we have the government and you have the private sector. You have the private sector actually is leading the digital transformation. Here in Saudi Arabia, we have the government actually is leading the digital transformation.
Yes.
So without the regulatory framework and landscape, I think that wouldn't be possible to really integrate, into these platforms.
No, and Saudi's been at the forefront of digital in terms of the government and enabling, whether it's open banking or otherwise, 3-4 minute approvals don't happen without a centralized credit system, right?
Actually, this is a country where talking about the regulation. So when I came for the first time, you have these big events for fintechs that happen every year in the country, and having you have a minister and SAMA governor opening, and actually they talk about how we should go for innovation. They talk about moving forward, right? So there is a lot of really pull from them for us to move forward. So I think that's going to help a lot, and that's why it's going to go fast. But eventually, the role of the banks, we should be able to move the money from the people in the retail side, all this capital, into the system. And there are many mechanisms in the society to do that. I mean, definitely capital markets is one of them. But the moment we can funnel all that and be the bank of those fintechs, that's when the economy can start prospering, right?
You're widening the funnel and getting more.
When our balance sheet is available for them, so they can do anything with our balance sheet. So the deposits for the people they multiply themselves. That's going to be, I think, an engine of growth in the kingdom, absolutely.
Mohammed, turning to you, and we've heard a lot about how SAB and Bank Albilad are navigating the challenges to contribute to the growth and facilitate it. How do you see STC Bank's role in contributing to Vision 2030?
I believe Saudi Arabia moment is now, and STC Bank was built to really enjoy this moment. So we believe that the foundation for STC Bay from the beginning, and then the foundation of STC Bank was meant to align with Vision 2030. And our alignment with Vision 2030 by building an ecosystem bank that will drive the show and to be an infrastructure player within the country. We don't look at ourselves as a traditional bank or only as a digital bank. We believe STC Bank is an infrastructure player who's going to enable all the pillars for Vision when it comes to the financial sector. We're talking about financial inclusion, cashless society, SME, I would say, development. So if you'll go back to STC Bank's strategy, you will find out the three pillars are really an integral part of STC Bank's strategy. So we are fighting days and nights to make sure that our contribution from STC Bank towards the vision, ambition in financial sector has been fulfilled. And when I look at STC Bank today contribution, I could easily say that we have tackled untapped segment in the market. Believe me, 5, 6, 7 years before, a lot of segments, we can name them youth, blue collars from the personal banking side, SMEs with all their scales from corporate side, they were not served as it's being served by STC Bank. And our value proposition and the way we are building our product and services to serve the untapped segment is running under the umbrella that we want to accelerate, okay? These segments, I would say enablement within the Saudi market, we are able to succeed by building up the biggest customer base ever for youth, blue collars, SMEs across all Saudi banks. And this has been also translated when we were trying to move to STC Bank. We have also captured the biggest market share into these segments. So what I meant to say, financial inclusion, cashless society, SMEs, and other pillars of the Vision 2030 were really pioneered by STC Bank, and will keep going with the same spirit, the same momentum, to reach to a level where the targets for the vision gonna be achieved. We are still at the beginning as a bank. We believe the way forward and the vision and the strategy that we are entertaining as we speak will take us somewhere where there will be a great stories to be built for this country. And I'll go back again, we are founded for the vision and will continue to support the vision up to the end.
Yeah, in the SME segment alone, funding gap is estimated at 300 billion credit gap in that space. But let's take that a little bit deeper into your own business and look at your digital model. What are the biggest cost efficiencies and savings that you've realized with this model?
Look, cost efficiency for us, I will not look at it only from reducing the operational cost of the bank. I would look at it as a sustainability pillar that will allow us to build an ecosystem bank driven by a cloud native infrastructure, driven by API infrastructure that will allow us to build our product and services in the fastest way ever, with the minimum cost ever, and to be as fast as the customer expects such product and services to be served in the market. So the way we look at it, we don't look at it only to reduce the cost. We look at it to be a pillar to succeed in our journey, in our strategy, and to make sure that whatever saving gonna happen as a result of that thin and nimble setup with a full agility will be converted for more investment that's going to be reflected into a customer value proposition. So our aim is to gain value from the efficiency and reinvest it back to have a better reflection into our customers. We believe today that the reflection of the efficiency cascaded from the agility and the, let's say, cloud native and API native infrastructure up to middle office, back office, and in one way or other, the cascade happening into such thin layer of infrastructure ending up by major efficiency into our middle office and back office and reflected back into a better value proposition, a better customer experience, time for the customer to acquire a product from the bank with the end-to-end digital journey, with the STB kind of transactions. So the value proposition around efficiency, we are always looking at a customer-centric view more than again for the bank itself. And we have seen a lot of success stories happening on the ground where the customer have already realized how the efficiency is adding value to him and the stickiness for the customer and how the customer is really enjoying our experience, how the customer accessing our application on a daily basis, how our bank is succeeding in a very sustainable way in the Saudi market. I think the efficiency is the main pillar for achieving such targets.
Right. And you mentioned sustainability. We talked about it earlier. I'm obviously going to turn to you, Tony, on this. ESG is a subject that's close to your heart, and you've talked a lot about ESG-driven transformation.
Yeah.
Can you tell us why that is important in the context of banking?
Yeah, I remember 15 or 20 years ago, what the chairman of HSBC said, what's the biggest industry in the next 20 years? And we all went, I don't know, we didn't know. And he said it's going to be around energy transition. I don't know how he knew that 20 years ago, but so from a financial point of view, financing the transition is a great business. So the sustainable part is easy to work out. And we're, like other banks, very focused on helping customers with that. On the S side, the social side, again, we're a very rich industry, and it would be more than remiss if we didn't help build sustainable societies, fund projects around infrastructure which cleans water or saves the environment. So that's easy. And on the G side, less recognised. If you look at the long history of economic development, it's the countries with the strongest governance infrastructure that succeed over the very long term. So you take the United Kingdom as an example, you take the US as an example, you take Singapore as an example. They've all fundamentally succeeded consistently because of government infrastructure and the ease of doing business. So that's why the G is important. So yeah, it's passionate, and because I believe it creates sustainable growth.
Right. We've talked a lot about liquidity, housing, digital, ESG, and I think obviously each of these topics can have a panel on its own. But maybe just to have a final word from each one of you, what do you think is the single most important lever that will create sustainability and prosperity for this sector looking into the future? Maybe start with you, Ese.
So because we're many, so we'll go for one lever that I think it's very relevant, which is, I think, the access to credit, at least for both individuals and SMEs. I think if we can deliver that to the kingdom, to the vision, together, and that's probably, I would say, one of, if not the one of the most relevant levers to deliver growth, which is financing all the way from the ecosystem for SMEs, growth capital for entrepreneurs to start, and then for individuals to have a family prosperity, absolutely.
Well, just very quickly, I know we're running out of time, but you can't have a panel and not mention AI. So I think AI plays its part in many areas. In fact, one of us probably should be an AI program next time you have a panel. Be interesting to ask the
AI what they think. Yeah,
thinks
absolutely.
Whatever. But
I did a lot of that
technology
yesterday.
will obviously be a very core part of the financial industry strategy across banks. And yeah.
Well, I guess banks will have to continue to be innovative in terms of their structured finance, IDs, and also in terms of liability generation. And I think using, of course, technology is very important, very key, and using the data as well, and how to penetrate the market. I think that will be helping the banks to sustain their growth in the future.
Okay. Mohammed?
I think customer-centric use cases, value proposition driven by data and AI with a better outlook for the future and avoid the short gains, I would say. This could help a lot in making the sustainability.
Second that, we should look at long-term growth. Thank you, everyone, and thanks, everyone, for participating.
Thank you.
Exactly out of time.
يعطيكم العافية.